All right, welcome to the weekly prep video for the week of September 15th to the 19th. In this video, we'll be taking a look at the action over the past week of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week, like we do with every weekly prep video. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link below. Starting with the NASDAQ, QQQ up 0.4% on Friday, new all-time high and new all-time closing high. Really strong week, ending up 1.8%. In really the past 2 weeks, you could not have asked for better action. We had that really ugly gap down on Tuesday, September 2nd, under the 50-day moving average. Quick undercut of the support gap, and then immediate response from that level. Followed it up with a gap up on September 3rd, getting right back into the 20-day moving average. And from there, really started to accelerate into new highs. Ideally, here we get some chop instead of just more acceleration, because when you get acceleration like this, you also will get acceleration on the other side to the downside. Now, when that move happens, it doesn't have to happen this week. Really, what I would be looking for is a break of at least the 5-day or the 10-day before getting bearish at all. But just know that we are not at the early stages of this rally, definitely a little bit later stages. We've had a nice consolidation over the last like 6 or so weeks. So I wouldn't be surprised if it kind of rallies into the FOMC meeting, maybe even a little bit after that, after they cut rates. But at some point, we're going to have a correction here. Don't need to time, like we don't need to predict when it's going to happen. Let's just watch the 5-day and the 10-day moving average. S&P 500 up 1.6% for the week, basically flat on Friday. Higher highs, higher lows, closed near the low of the day, but really strong action. It's very similar to the Nasdaq, but because positioning in the S&P 500 was not as aggressively long as the Nasdaq, you saw the correction kind of just stair step with higher lows the entire time, along with higher highs, where the Nasdaq was lots of volatility, lots of sideways action, and then an acceleration higher. The S&P 500, because it wasn't overbought, and it's still not, as we'll get to with the commitment of traders data, just trading a little bit smoother in the uptrend. Not as powerful on a percentage basis, but price action wise, very smooth trading. Next, we have the growth stocks of the Russell 2000. Gap down on Friday, closed near the low of the day, still above the 5-day moving average, but good week overall, up 0.8%. And we did make a new high for the year 2025 and right at highs for the last 52 weeks. Zooming out, we still have a little bit to go till 340, which is all-time highs on the Russell. So still think that this can go higher as long as we hold that 20-day moving average. ARKK, one of the better looking charts in the market going into this past week. We had higher lows on the 50-day moving average, similar kind of gap down under the 50-day as the NASDAQ on September 2nd, rallied up to the highs from this point, closed at a new 52-week high and new multiple year high, but still has plenty of room to go to get back to all-time highs. Would have to double from here while the Nasdaq's already at highs, but as kind of a measure of like risk on appetite in the market, when this is above the 20-day moving average, along with IWO, that's usually a good market to be trading on the long side. And then taking a look at IBIT as a way to track Bitcoin. Awesome move today, well, Friday, back through the 50-day moving average. Nice, strong close. And it does look like this has just been a breakout retest. So we had that breakout back in July. Now we've retested that area. Now we're coming right back into a previous sell area. So whether we chop here or kind of just rip into new highs, that's anyone's guess. But the fact that we're back over all the key moving averages is not a bad thing. Next, taking a look at the liquid leaders. This week I did a lot of shuffling because not for a bad reason. Usually I do some shuffling of the leaders list because leaders are dropping off and they're breaking their 20-day EMA on big volume, stuff like that. Not the case this week. Just a ton of strength, and I'm trying to find the strongest stocks to put in this list. So I did take out Robinhood. I took out SoFi. Both of those stocks are acting completely fine. And added Rocket Lab, RKLB, which on Friday had a nice little gap up, base breakout into all-time highs. Just phenomenal action the past 2 years out of Rocket Lab, from $3.50 to $53. Really nice kind of base here where we tested the 50-day the first time, hammer candled off that, had this ugly bar on September 3rd, got back into the 50, but instead of following through the downside, we rallied back up, set this nice little pivot, and then followed through to the upside on Friday. APP still running after the S&P 500 inclusion back, I guess, last Friday on September 5th. Really nice action, up 18.7% this past week. So that includes the gap up on Monday. But really strong action, trading above all the moving averages and closed at a new all-time high. CRDO finished the week up 15%. That was another stock that I added to the leaders list this week. Just a little extended from like the 20-day moving average. Some chop here, coming back into the 10-day in this gap zone might be a pretty interesting spot to try to play for like a shakeout in reverse. Overall, just acting extremely well. Google, after settling, or not settling, after they didn't have to sell Google Chrome, after they didn't have to sell Google Chrome, they were up, what, 9.2%, 9.1% on September 3rd. Since then, just continues to rally. Every pullback to the 5-day moving average getting supported. Another new all-time high on a closing basis. AVGO up 7.45% this week, flat on Friday. I was a little concerned after the candle on September 9th, but lower volume on that price action, down 2.6%. And then when you get that follow through with, this is called a kicker candle, where you have an ugly candle on the way down. The next day you gap up and open right at the previous open. And that just shows you how strong the stock and the market itself is. So just consolidating above the 5-day moving average, not doing anything wrong the past 2 days. When you're up 7.5% on the week, it's hard to complain. BE, probably the strongest stock in the market, up 17.8% this week. It was getting a little extended. Today, we had a little shakeout to the 5-day moving average and support gap, undercut and rallied from there, closed right at the high of the day. It is definitely extended from the 50-day. That's trading at $40, so over 50% from that point. But again, until we see like another gap up and then like a blow off top type massive volume reversal, the trend is up and it's in the right theme, in the right market, and has been a true market leader lately. Alibaba added it this week, breaking out of a 3.5-year base. Just incredible action out of Alibaba and the Chinese equities as a whole. Definitely a group to start to focus on. It's annoying because I got stopped out of this on September 4th, and I used to like get stopped out and then turn bearish when the price action like reversed and got bullish. I don't know why mentally I would do that, but if you struggle with that, like that's not something that you should be doing. Like you should have to rewire your brain to say, "Hey, I got stopped out and it ripped higher. Wow, this market's incredible. There's going to be great opportunities out there." And I've been stopped out of a couple names, RKT, Alibaba, APLD recently, and they're all ripping higher. And that shows you that the market's extremely strong and you shouldn't get bearish when that stuff happens. Alibaba up 14.3% this week. Strong close on Friday after a little like gap down sell off. Just overall great action here, is a little bit extended in the short term. So some chop, some pullback here, and then we'll have another entry point. ALAB up 19.9%, call it 20% for the week. And that's with two consolidation days on Thursday and Friday, letting that 5-day moving average catch up. Incredible action was this last Thursday where we came back into the high volume close from the earnings day, touched off it like within a couple pennies, responded to that area immediately, and has been off to the races since then. Just awesome action. IPO making new all-time highs. This type of consolidation usually just leads to higher. Any like very low volume consolidation over the 5-day moving average, and you're just asking for another move up. And then CLS continues to chop like all week, finishing the week down 0.4% while the market was strong. But the big gap up last Friday, up 9.6%, allows this to close at the 5-day moving average and just be flat on the week. So I don't think it's doing anything quite wrong. There is one slight gap down. It didn't really participate in the strength this week, but I'm not too concerned about it as long as um, we don't like follow through to the downside. Even if it came back into the gap zone here in the 20-day moving average, it's just like a breakout retest, and that could be a spot to watch. Next, we have the industry ETFs, and because this is the weekly prep video, we'll go through each one of them, but only spend time on the ones that I think are more important and kind of breeze through the rest. So Block, kind of a blockchain ETF, but now a lot of the stocks in that holdings have shifted into like data centers. So while crypto was weak, this was extremely strong, and you started to see all those like crypto mining stocks now become data center type plays. New all-time high close. Awesome action this week. Actually, let me sort this by price percent change this week. Um, awesome action just riding over the 5-day moving average. Pull back into the 10-day and the gap zone would be a breakout retest. Nice spot to manage risk against. Nothing to complain about there. KWEB, Chinese Internet ETF. Let's go to the weekly chart. If you're sick of me talking about this, I'm sorry. This is just the most beautiful 3.5 year base that we're just breaking out of. I posted this on Twitter, and people are like, "Yeah, but I don't trade Chinese equities." And that's exactly how a new trend emerges. You get liquid leaders like Baba making new 52-week highs. You get the entire internet ETF starting to curl up, breaking out of the base, and then it's off to the races. So the fact that KWEB had one of its best weeks, up 5.7%, breaking over that previous high in the base. Awesome action. It could pull back in just to have a breakout retest, like to the 20-day moving average. And that would be a spot that I would try to get a little bit more aggressive on. Gold miners, GDX, just going vertical at this point, up another 5% this week. You could see multiple gap ups as we're getting extended to the upside. Volume was picking up there, subsided a little bit Wednesday, Thursday, and Friday on the move higher, which is good. That means it can continue even more. But if we see just like massive volume come in like Monday, Tuesday, Wednesday, as we continue to extend, I would be looking for like a blow off top in this move. Definitely don't want to be starting a position up here after we've moved from 51 all the way up to $70. A 40% move in gold miners in a month. It's a little extended. PEJ, new all-time highs, or at least 52-week highs. Let's see. No, new all-time highs. Huge move yesterday, up 3.6%, and then higher highs, higher lows, new closing high on Friday. Semiconductors basically flat on Friday, but new all-time high. Really good action after the gap down under the 50-day. Got supported last Tuesday, ricocheted up to new highs. Now just looking for a higher low pullback, maybe to the 10-day moving average. That would be kind of like a breakout retest and a really good spot to manage risk against. So on a lot of these names that are just kind of going parabolic or really ripping higher, I really hope that we pull back and just set in some higher lows. I don't want to see the indexes, the liquid leaders, industry ETFs. I don't want to see those continue to accelerate because once we get those acceleration to like once we get the acceleration higher, chances are we're going to get an acceleration lower and then need multiple months to base out. If you take a look at like September of 2020, after we made that acceleration move, we had to base for about 2 months before price action got clean again. So hopefully we don't do that. Hopefully we start to pull back in these names and continue the trend in a much more reasonable manner. But we'll see. I don't control the market. IGV software ETF, awesome week, up 3.3%. Huge gap up on Wednesday. Since then, just kind of pulling back into the 5-day moving average. Hasn't even tested it yet, so not doing anything wrong. Consolidating up here, just working on the right side of this base. NLR, nuclear and uranium ETF, made new all-time highs on Thursday. Gap down slightly, still closed over the 5-day moving average. So in my mind, not doing anything wrong there. XME, metal and mining ETF, up 1.97% for the week. Did make a new high on Thursday. Tight, low volume close on Friday. Pull back to the 10-day in gap zone, perfectly healthy. Cybersecurity ETF up 1.9% for the week. Really good action. Little test of the 50-day, higher low, and then popped back, building the right side of the base here. This could even pull back into like the top of this gap zone into the previous highs here and be completely fine. It would hurt because that's a lot of volatility, but this is how bases should form. So pullback, higher low. It doesn't have to go that low, but some pullback, some chop here would be pretty healthy. XLY, the consumer discretionary ETF, new 52-week highs. Not really one that I focus too much on, but the more ETFs that you have above their rising 20-day EMAs, the better. XLE, one of the themes that haven't really participated off the lows, just barely getting over the 200-day now. So still expecting a lot of volatility here, but the fact that we like have rallied up to a new rally point high, pulled back into the 50-day, and for now that's a higher low, is good overall. XLF was getting a little worried about this financial ETF on September 5th when we lost the 5, the 10, the 20-day moving average. And I said if we lose the support gap in the 50-day, that would be a pretty bad sign for the market. Thankfully, we didn't. We found support at the support gap, resolved higher on Thursday. Really nice tight candle on Friday above all the key moving averages on low volume. Robotics ETF continues to chop higher. Low volume, close over the 5-day moving average on Friday. Not doing anything wrong here. ITA, that's the defense and aerospace ETF, made new highs on Thursday. Low volume consolidation candle on Friday. I'm going to sound like a broken record because a lot of these themes are just kind of trading alongside each other at this point, but just want to be objective with what I'm seeing here. IYT transportation ETF continues to have trouble with this resistance gap up here. Closing above that would obviously be bullish, but a lot of wicks at the 50-day moving average for another higher low is not a bad thing overall. And then zooming out, you can kind of see a little VCP pattern forming up here. Another rally and then like tighter price action at $73 would be really nice. XLV, the healthcare sector ETF, got over the 50-day or sorry, the 200-day, got over the 200-day moving average on Thursday. Immediately reversed off that resistance gap, lost the 200-day on Friday, closed under the 5-day, but on lower volume. And really, like, if you're not above a rising 200-day moving average, you just have to expect a lot of volatility. Like, this is still just basing in a stage one base. Maybe if we get through this resistance gap, you could call it a stage two uptrend. I would say that it probably has bottomed. Um, but until you get into a stage two uptrend and you get that 200-day sloping up, the moving averages in the right order, like it's going to take some time for the 50 to get up to the 200-day. Just expect a lot of volatility overall. XLB, Material Basics, another ETF that I don't really focus on, but above the rising 20-day EMA. FDN, this is the Dow Jones Internet ETF. A little gap down on Friday, lost the 5-day and the 10-day, closed at the low of the day, but on very light volume. Just a pullback to the 20-day and kind of a breakout retest would be fine in my eyes. IYZ, Telecommunications ETF, made new all-time highs on Thursday. Gap down, loss of the 5-day moving average on Friday. Did test the 10-day and held the support gap there. XLP, Consumer Staples ETF, another one that I don't really pay attention to, under all the key moving averages and not really participating in the rally. XRT made a new multi-year high on Thursday, then gapped down, lost the 5 and the 10-day moving averages on a pretty big pickup in volume. So we'll see if we follow through to the downside, maybe put in a higher low on that 20-day moving average in gap zone, or if we can resolve quicker to the upside with like a gap up, and then we can manage risk against the 10-day and the low today. XBI, Biotech ETF, great action yesterday, and then kind of disappointing action today. Down 1.6%, loss of the 5-day moving average, and closed on the low of the day on a pickup in volume. LABU is one of my larger positions right now, so I hope For my sake, we can just undercut and reclaim the 10-day moving average and support gap and then get going again. Like I said with the, what was it, XLV, until the 200-day starts sloping up, which is just starting to flatten out on biotechs, you just have to expect a lot of volatility. So am I starting a new position on a breakout up here? No, I am not. I bought the position on a higher low test of the 50-day and then got through this pivot at $86, trimmed some into strength, and now I can sit through the volatility because I expect this to be an emerging theme for the rest of this year. But I have studied enough charts to know, okay, the 200-day is just getting flat. You have to expect a lot of volatility until that starts to trend up. The nice part with this is we have the 5, the 10, the 20, the 50, and the 200 all in the correct order at this point. So I'd expect less volatility in biotechs than I do in the health sector. ITB, Home Builders ETF, another gap down after a strong day yesterday. At this point, I'm just looking for a pullback into the 20-day in the support gap. If we can undercut this, that would be a spot that I would try to take NAIL, which is the triple leveraged version of Home Builders. I think there's just we got a little extended. The 200 days still sloping down, so kind of building in that expectation of volatility. I don't really see this only pulling back to the 10-day for like a really quality entry point where we don't revisit it. So I'm watching that 20-day EMA and the gap zone at like 110.90 as a potential pullback buy. TAN, the solar ETF, is next. Has been weak all week, down 5.3%. Still closed over the 20-day moving average. And now we do have the 200-day finally sloping up. We have the moving averages in the right order. Just looking for a test of that support gap below the 20-day EMA for just another higher low in the structure overall. And then MSOS, this is the cannabis ETF. Really strong move from $2 up to $6, so about a 200% move. Since then, we came under the 20-day, bounced, and then followed through to the downside. Action is getting kind of ugly here, but we do have a close under the previous low. And at this point, any swing traders are out of the name. So if we get an unfilled gap up, say we gap up on Monday, in my mind, that is buyable versus Friday's low for a really, really tight stop. And then you can kind of play the news. Are they going to reschedule cannabis? I don't know if they will, but you can manage your risk nice and tight there because it's not extended. It's not trading at 6. It's trading back at 422. Probably no swing traders' eyes are on this at this point. So that's when I like to build positions and really skew that risk reward in my favor. Before we get to the long and the short setups, I do want to go over some exposure levels. So first, NAAIM, this is the active investors exposure. This is captured as of Wednesday's close. And the usual threshold that I have is 95%. If exposure level is over 95%, who else is left to buy? It can go higher. It's gone to like 116 in the past. So 95 isn't like, okay, 95, sell everything. But if everyone is pretty long already, who's else left to buy? We're not there yet. We did tick up from 81 to 86, but we're not even at overbought levels with the indexes at high, with momentum running high, um, with quantum names breaking out, with open door really, really roaring. I feel like the market is starting to feel FOMO, but positioning isn't there just yet. So until we see positioning get crazy on the NAIM and we see some like breakdowns on heavy volume, the trend is up, momentum is up. That's the direction that I want to play. Next, we have the commitment of traders data, and this is taken as of Tuesday's close. So NAAIM is Wednesday's close. This is Tuesday's close. First, we have the NASDAQ. Um, and unfortunately, we do see exposure starting to tick back up. So the green and the red lines are speculators. Well, the red is, I basically just look at the red and say, like, okay, if the red is below zero, then more people are long than short, and we just have to take that into consideration. In August, speculators were extremely, extremely long the NASDAQ. And that's why you saw all that volatility without any price appreciation. We saw a lot of price appreciation in the Russell and in the S&P 500, which we'll go to in a second, was not completely overbought. We unwound that position coming into this week, which is why probably we had so clean moves, so many clean moves to the upside this week. Now we are starting to see positioning get a little bit more long. It's not at the extreme levels that we saw in August just yet. So I do think that this rally can continue. But it's going in the wrong direction. The more that we get overbought, the more likelihood that we're going to enter a correction. So we're not there yet, but we're getting there. The S&P E-mini futures, you can see they're actually short. Like positioning is short the S&P 500 right now. And that's why you're getting cleaner action out of the S&P 500 versus the NASDAQ overall. Then finally, the Russell 2000 actually got even more short. So the last 4 weeks or so, we have unwound a extremely short positioning into kind of a little bit more neutral, still short, but more neutral. And then this week, tides have turned. We flipped back, and they're getting more short the IWM, which the growth stocks of the IWM is the IWO chart that we covered earlier. That is a great sign that this rally can continue, especially in small cap names instead of like the large mega cap tech stocks. All right, getting into the long setups. First one, we'll just sort this by average dollar volume, so most liquid to least liquid. First one is NBIS. Huge move on September 9th, up 49%. From there, had a secondary, which actually got bought up the next day on September 10th. Now we're just kind of chopping lower. Really good undercut of the previous day's low. Strong closing range, finishing Friday up 1.4%. Ideally, we get like another test of the 5 day or come like a pullback test of the 5 day moving average. But in this type of market with this type of name, lots of momentum, just looking for a break through today's high as a potential entry. Stop would be whatever that day's low is. I want to keep my risk nice and tight because again, we're at the spot in the market where things are accelerating higher. If you're not getting traction on trades, do not stick around because eventually that acceleration is going to flip to the downside. And you don't want to be left holding the bag and just saying, the market has been strong, it'll come back, and then taking larger and larger and larger losses. So on any of these names, risk has to be tight, and we should be getting like progress right away on our positioning. Roblox, excuse me, next continues to shop at this resistance gap because the stock has, whenever a stock has a resistance gap that it trades up against, I'm not a buyer on strength. I'm a buyer on a shakeout. So pulling back into the 20-day moving average and the gap zone right at 128.40 as another higher low in the base would be the spot that I would be looking at. If it goes without me and goes higher, that's fine. We'll find another spot to trade it, but I will be watching this one for a pullback. SOUN, really nice base here. We put in a low on April 7th, then another higher low in the June, higher low in July, higher low in August, and potentially putting in another higher low right now in the beginning of September or middle of September. Nice inside day on Friday on lower volume. We did close on the low of the day, which you could say, hey, that's an ugly candle. But again, we're in a momentum market. This is a name, very high ADR, 7.6% ADR. So when it moves, it can really move on you. You don't need huge position sizing to make a meaningful push in your account. Just looking for either a shakeout of the 10-day moving average and the lows of this pullback, and then a reclaim of that area, or a gap up, opening range break versus the lows of the pullback as a potential buy. AFRM, beautiful action under the 20-day moving average, under the support gap on Friday. Took that out, bounced, took out that level, which usually isn't a good sign, but it took it out in like literally a 1 minute bar, just wicked down and then came right back and then resolved higher. Really nice move on Friday, ending the day up 2%. Looking for a higher low test of that support gap right around 80.24. Another kind of like breakout retest. If you zoom out, really nice base, just a breakout retest as the buy point. But chances are today was the buy point on it, and at least the low risk entry point on it. MP, I've seen people like try to buy it this week. a lot of eyes pulling into the 50-day moving average, and that's why I think a shakeout would be perfect. Just looking for an undercut of the lows of the pullback and of the 50-day moving average. A reclaim of those lows would be the buy point, and then I would use a 1 or 2% stop below that to manage my risk. You could buy just kind of through this pivot at 64.25, right by the 10-day moving average, um, and then use your stop at the 50-day. That risk is tight enough where I would not be mad at that at all. But if we can get the undercut, that would be even better. SMR, probably a name that no one is looking at right now, but we saw OKLO breakout earlier this past week. I actually took that breakout. Really strong action. And within that same group, we have SMR. So as that group starts to participate and the leader starts to break out, now we can turn to the other stocks within that group. And really like SMR moved from $11 up to $53 in 4 months, 3 months. It's unfortunate that it pulled back so heavily from 53 down to 30, but now it's forming my one of my favorite setups outside of like a support gap undercut to trade. It's the higher low 50 pop. So it has to be a stock with tons of momentum, has to have the ability to make really large moves. You lose the 50-day moving average, rally back up to it. First time you test it, you fail, pull back, but put in a higher low. So price is getting supported at these higher lows. You know what I really like is these subtle unfilled gap ups on September 9th and September 11th. And now we have a pivot to work with at the 20-day moving average. Just a break through that area is viable versus Friday's low. Net, one of the leading software names, just looking for a pullback into the 10-day moving average and support gap at the 214.37 area. That would also be a breakout retest. So a nice spot to manage risk against the 20-day EMA. FUTU, one of the larger positions that I have right now, and I'm looking to add to it on Monday, Tuesday, whenever it happens. Really nice move into the 20-day EMA on Wednesday, followed by a gap up on Thursday. Stake out again to the 20-day, but a higher low on Friday. And we have like the emerging theme of China and other markets outside of the US. So if we zoom out here, this is consolidating perfectly before highs. If this would have rallied and just like made new highs right away, I would be more cautious on the name. But the fact that we're consolidating for the past couple of weeks after the earnings shakeout, just below all-time highs, is extremely bullish. So with this, just looking for a breakthrough today's high as an entry, or for me, an add spot. And then for that, I would be using Wednesday's low as the stop. PSTG, just awesome action. We've covered this plenty of times, but double bottom base, got tight, broke out on heavy volume, up 32%. Every gap down, open on the low, closed on the high, open near the low, closed on the high. And then any consolidation days were nice and tight under the 5-day. We popped over the high volume close, followed through on Thursday, inside candle on Friday, just looking for a pullback into that HVC, the 5-day EMA, to manage my risk against the gap zone low and the 10-day EMA. Elf Beauty already had a 100% move off the lows back in April. Have the moving averages in the right order. 200 days now starting to trend up. So I still expect volatility because the 200 days not in a cleanup trend. And that's why we're not going to be buying on strength. We're going to be buying on weakness, a little shakeout of the 10-day moving average, the support gap, manage risk against the 20-day EMA there. AAOI, maybe my favorite looking chart in the market that hasn't broken out already. Had a pop, and this is kind of like not a perfect example of the higher low 50 pop, but in spirit, we had a little rally through the 50-day, put in that higher low, had the pivot, and broke through the pivot and the 50-day moving average on Wednesday. 2 consolidation days. I really should have bought this on Friday on the undercut of Thursday's low and the 5-day moving average. It immediately responded to that level. That was a buy point, but now looking through Friday's high as our entry, stop would be Friday's low. Pony, I got stopped out on Friday on this name. It's a Chinese stock, so Once you have the leader breakout, Alibaba and KWEB break out of that 3.5 year base, now it's what other names in that theme can start to break out that have already shown that they can make very, very strong moves to move your account. And Pony recently in April made a move from $4 up to $22. From there, pulled back to 11, 10, $11, and then has been consolidating higher low, higher low, higher low, higher low, now getting nice and tight while Chinese stocks are breaking out. Just looking for a breakthrough 1550 as the entry, the stop. I'm going to be a little bit wider with it. So sizing wise, not going to take it with huge size, but using that 10-day, or sorry, the lows of this pullback and the 5-day EMA as the stop there. PSIX, very clean move to the upside, rallied from what, $18 up to $120. Came in, just perfect undercut of the 50-day moving average on the first time. Support gap, immediately responded to the support gap area. So to me, that's buyers stepping in, supporting that action. We get a higher low, rallied up again. And now we have this very small gap zone and the 10-day moving average as a potential undercut and rally. Stop would be the 20-day EMA for that one. Then the last two are kind of like performance booster type trades, trading about $40 million a day. But again, in this market and with positioning in IWO so short, and we're in a momentum market, I think this can make pretty quick moves. It's already made a pretty quick move, went from $2 up to $9, consolidated into the 50-day, higher low, inside candle on Friday. Just a break through Friday's high, stop at the 5-day moving average would be the trade there. And then LASR, another name that has made a massive move from $6 up to $30, is consolidating as volume is declining. And then on Friday, we had basically a dead volume day. No one really traded the stock. And I haven't seen anyone post about LASR either. But with this, just looking for a breakthrough Friday's high, stop would be Friday's low as a performance booster. And finally, the short setups, I only have five. Again, we're in a momentum market. Until we see some breakdowns across the market, I think momentum is still to the upside. So want to be cautious with any of these shorts. But a couple to watch. First is NEGG. This stock has already put in its top, rallied from $3 up to $130, and then very, very quickly from $130 down to $30. From there, we rallied up in the resistance gap, rejected, put in a higher low, and two spots that I'm watching is another uppercut and fail of the resistance gap and $50, or if we could get up to the 50-day moving average at like 54, it's another spot I'm watching. But it would have to like immediately respond to that area, and really like you want to stay on the side of the VWAP on these types of trades in a momentum market, in a momentum name. Like just make sure you're using a stop and position size this correctly. You don't need to position size it super well or super high, a very large position to make a meaningful move in your account because its ADR is what, 24? Yeah, 24%. So watching for that $50 area for an uppercut and fail. Otherwise, the 50-day moving average is a secondary spot. Joby was watching this for a short, and we had a big gap up on Friday, rallied up into the 50-day. I didn't short this on Friday, probably should have, but didn't get quite to the 50-day, but got right up there, then lost the resistance gap, lost the top part of a second one, and closed pretty weak on big volume. So that gap was just sold off into, which means there's probably more selling to go. Just looking for a little rally back into the 20-day EMA as a potential short. And then the stop would be, I don't want to give it to the next resistance gap. What I would do here is let it rally in the morning. If it loses the daily VWAP, that would be your entry. The stop would be the high of the day. And again, don't need to position size it super large because we don't have a lot of stocks that are breaking down. You don't need to size the first short in your book very heavy. Once things start breaking down left and right, you'll have plenty of opportunities to get in with size. DXYZ, thin, super thin name, only trades $11 million a day, but just in a constant downtrend. We've been talking about this as a short from 45, just lower highs, lower lows, resistance gaps all the way down. Another weak close on Friday, more follow through, like through Friday's low could be a entry, stop would be Friday's high. MSTR, I actually closed a bit of my MSTZ, my short position in MSTR on Friday, just because the strength of Bitcoin, like getting back over the 50-day moving average, was very impressive. We're in a momentum market, so it should be rallying more than it has been. And on September 4th, we had a perfect undercut and reclaim of the support gap. And if you zoom out, this was like a breakout retest. So the fact that we had that undercut and reclaim, and then we wicked into that area 6 times in a row, followed by a gap up on Friday, makes me think that this is going to have like a couple days of rallying before it's actually ready to be shorted. But if Bitcoin reverses over the weekend and we see the market start to move down, and this, like today, we uppercut and failed right at the resistance gap high again. So if we see more weakness out of this on Friday and we see Bitcoin weakness, market weakness, then I think we can take this on a breakthrough today's low. Otherwise, I think this will probably, like in a perfect world, would rally up to the 200-day moving average that's now downsloping as Bitcoin gets extended the upside. And then this will be like the first name that I try to hit with like real size to play on the downside. I do still have an 8% short position in MSTR using MSTZ. Finally, we have ZEPP. This has been a name that I've been watching. I think you could flip a coin, call it a long, call it a short, because we have such nice consolidation right at highs. But like we saw with NEGG, we had that same type of consolidation at highs. And then when you broke below the lows of that consolidation, we just waterfalled down from 130 to 30. So that's what I'm looking for here. I want to short this on weakness, on a loss of the 10-day, on a loss of the lows of this consolidation. And then we should get some pretty linear move to the downside. If this breaks like over Friday's high, you could play this on the long side for another move higher. I don't have a short in this yet, so the higher this goes, the better the short becomes. Let it break out, let it go to 100 for all I care. Um, that would be an awesome trade to the long side that you could take. But it is a thinner name, only $23 million a day. So keep that in mind. You don't want to stay wrong on a name like this because it can move very, very quickly. So that's going to be the weekly prep video for, whoops. That's going to be the weekly prep video for the week of September 15th to the 19th. If you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the market open and the trades that I personally take, you can sign up for the Market Pulse Discord using the link below. Have a great weekend, and I'll see you guys on Monday.